Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, November the 5th, and I just wanted to take some of your time and talk about what we've seen in the markets this past week. And boy, has it been a very, very interesting week as we've been talking about for the last several weeks leading up to the presidential election, what's been moving markets, what markets have been going on, and what's been happening in markets, and what the outcomes are going to be, and what we're going to see moving forward. So last week we saw the S&P 500 sell off over 6%, meaning it was down negative 6%. Now, what's very interesting about that for the week and looking at it is typically when you see huge volatile moves that way, is you're going to see increasingly high volumes. However, we did not see that. So what does that tell us? That tells us that there weren't a lot of people in the market to buy. And it's just that people were selling and buying. And what were they selling? Well, a lot of what was being sold off were the large cap, big tech names that had moved markets higher. The reason why that those were selling off last week was the market was pricing in that on Tuesday during the election that there would be a blue wave, meaning that the presidency, the House, and the Senate would all be controlled by the Democratic Party, meaning that President-elect at the time, if that were the case, Biden, would be able to implement his tax plan. And you saw people selling off big cap tech names to go ahead and book their gains this tax year and in anticipation of that. However, we got to Tuesday night, and as soon as it appeared that the blue wave was not going to happen, you watched and saw the NASDAQ futures skyrocket and take off. And the reason is people were buying back into these positions because they're going to see a balanced government. And that's what markets like the most is a balanced government. But what was happening was people were going ahead and buying industrials and buying cyclicals and buying things that would benefit from a blue wave administration in the market, things like that would benefit like industrial machinery, because the Democrats had said that they were going to do some infrastructure spending, some deficit spending on infrastructure, and those were being played as plays in the market. And so you saw yesterday when we got into the morning and got through the day, we saw the futures take off and the market take off, and the big cap tech names really led us higher yesterday. And however, today the value play is really what's leading us higher in markets today. So we still don't know who the president is going to be, but what we do have a good idea from is whoever the next president is going to be, is they're going to be coming in and working with a balanced government, and not a lot is going to change with a balanced government. You're going to have some things move forward, and as well as top of that, what's helping move markets higher this week is you've had Senate Majority Leader Mitch McConnell come out and say he expects a fiscal stimulus deal to be passed before anybody else gets in office. It's the first thing they're going to be working on when they come back after this election is settled. So those are things that the marketer is looking for to move forward. So how does that impact you? Well, it just all depends on what the outcome is going to be of the presidency. But the play was that inflation was going to be here and things along those lines with the blue wave, and that hasn't happened. And so we're back looking at some deflationary trades and some deflationary trends and who's going to benefit during deflationary times. And we're positioned in both camps, and we have strategies to deal with both. So if you have questions about how to handle your individual portfolio moving forward, please feel free to give us a call. It's 904-346-3460, or as always, check us out online, www.riverplacecapital.com. I hope everybody has a wonderful rest of your week. Thank you so much.